welcome. Welcome back to my YouTube channel once again. How are you doing? All right. So thank you so much for stopping by once more. Today we're continuing the class that we had, classes we've been having, and we're going to be talking more about May 2024 diet that's just concluded ICAN Case Study diet. So in our last class, or in the first class we had, we looked at the question, looked at the pre-seen, the unseen, we scanned through it together, and then the second class we actually looked at the requirement one. So please, if you just stumbled on this video, please, there were two classes before this. You can just check my YouTube channel. I will link the videos on this video. I will link the other videos, but you can just check my YouTube channel and please watch those videos first so that you can catch up on this particular video because it's basically a continuation. All right. So, like I said, we'll be looking at requirement two. But before we look at that, please, if you have not subscribed, kindly hit the subscribe button, share this video, like let everybody benefit from this goodness of God. Like, comment, let me know if you have questions in the comment section if you want me to create a particular video, or if you have trouble in a particular aspect of case study, just let me know in the comment section and I'll do my best to try to create those videos, and that'll be all. And if you want to get any of my books to assist you in studying your personal study, just reach out to me. My phone number and my email address will be in the description, so just reach out to me and I'll attend to you. All right. So without further ado, let's just jump into this video. So, like I said in our previous class, we actually looked at the requirement one, where we're told to evaluate the financial statement of Eat Right and Smoothy Chocolatey, and we've done that. And now in this particular class, we'll be looking at requirement two. So what were we told? Although we have looked at this in our question review class, but let's just look at it one more time. We're told to evaluate the viability of the proposed introduction of the diabetic chocolate into the market based on its financial details and recommend the quantity of the product that should be produced and sold in the first 3 months. In addition, using the Ansoff market growth matrix, evaluate the extent to which spicy sales development strategies would assist in achieving the two strategic objectives. So, what are they saying here? So, basically, Spicy Confectionery Limited wants to introduce a new product, and the product is the diabetic chocolate, the chocolate for diabetic patients. So, what they're asking us to do, they gave us some information, some financial information. So, what they're telling us to do is that we should assess, I should evaluate that information, and then tell them, okay, oh, how much should we produce? How many boxes of that diabetic chocolate should we produce in the first 3 months? Produce and sell in the first 3 months of it being introduced into the market. So we're going to look at, based on the financial information that they gave to us, we are going to use it to determine the quantity that should be produced and the quantity that should be sold. And also look at the viability, because they're not just here to for charity. This is a business that is out to make profits. So we're going to have to look at the viability of this particular proposal. And aside that, we're also told to use the Ansoff products matrix. The Ansoff products matrix to also evaluate the sales development strategies that could assist Spicy in achieving its two strategic objectives. So, in the pre-seen and further in the unseen, they emphasize the two strategic objectives of Spicy Confectionery Limited. So, we're going to be using Ansoff's product market growth matrix to actually assess the extent to which their sales development strategies would help them to achieve those two objectives that they laid out for themselves. All right, so this is actually the report. But before we look at the report, let's go to the appendix section, the workings, so that you would understand what I'm saying. All right, so like I said earlier, we have actually looked at the question in our question review class. That's the first class. If you have not watched that video, please watch that video first. But I just brought out some parts of that particular from the question so that at least you will see. So now, concerning the introduction of the diabetic chocolates, we're informed. This was the financial information we're giving. So we're giving three products. We have the diabetic chocolate, that's new product that they want to introduce. We have the low sugar chocolate and the honeybee chocolate. So these are the three products that we have currently, and we're giving the selling price, we're giving the variable costs, direct material, direct labor, variable overhead, corporate overhead. Now, as a chartered accountant, or as a proposed or an incoming chartered accountant, when you see variable overhead, you are seeing corporate overhead. What does that tell you? Okay, before I answer, try before you listen to the answer, drop something in the comment section. Let me see. Try. I know that I'll still explain, but let me just give you like 2 seconds. Quickly pause this video and type what you think this variable overhead and corporate overhead is trying to tell you. All right, so well, now that you have made your attempt to the comment section, I hope you did. Please help yourself. Try to just say something. All right, so what is this telling us? Now you have variable overhead, you have corporate overhead. First of all, what is corporate overhead? Now, corporate overheads are like indirect costs that are basically for administration. Indirect costs that are basically for management. Yes, management and administration of the company that are used for basically the management administration, like something like rent now, for instance, you understand. So now corporate overhead is not directly traceable to a particular product, because corporate overhead is an indirect cost, you understand. Think of it like a fixed cost, because it is corporate overhead is a subcategory of general overheads, you understand. So corporate overheads are not directly traceable. So I'm giving you idea, they're not directly traceable, and the cost that we consider are costs that are directly traceable. What does that tell you? Let me just tell you the answer. Basically, we're talking about relevant costs, because relevant are relevant costs. Relevant costs are costs that are directly traceable to a particular product. And when you are considering, or when you are analyzing a product, or you're analyzing a particular thing, or you're assessing it, you only consider the relevant costs. That's the costs that are directly traceable. So what do we mean by costs that are directly traceable? Let me break it down a bit further. Now, for instance, I want to produce a, like, okay, let's say for my books now. Let's say I have 3 books currently. So let's say I want to produce one of my books, and the book that I have, I incurred, of course, the cost that I would definitely incur. I will incur cost on paper, I will incur cost on printing, I will incur probably costs for um what can I say? Cost on paper and printing. Let's just keep it simple. Cost on paper and printing to actually print those books, right? Good. Now, let's say I had to, because I wanted to print by myself, I rented a whole building for my printing company. Now, that rent that I incurred is a cost that I actually incurred, yes, because of that particular reason. So if by tomorrow I decide I'm not more printing books again, will I incur that cost again? No. So that cost is relevant, because that cost is basically for that purpose. So now why am I saying? Because some people believe that every rent is not relevant. No, that's not true. Some rents are actually relevant. Once that rent is as a result of that decision to print is relevant. But peradventure, let's say I inside my house, I want to use the corner of my sitting room to print. Will I not tell my landlord, if I don't print this month, will I tell my landlord, landlord, oh, I did not print this year, oh, that means you cannot collect. He will collect his rent, because this is his business. The reason why you actually rented that building, or rented that purpose, or yeah, you were living in that house, was not necessarily because of printing. So what's the business of the landlord? Whether, or you're telling NEPA, NEPA, please, I was not at home for 6 months, so don't bring NEPA bill for 6 months. What's their business? They will bring the NEPA bill, because that one is just like fixed, you must pay. So costs like that, now for instance, now they are basically for management and administration. Costs that are just for management, costs that are just for administration, those are corporate overheads. They are not as a result of that decision, so you cannot include it. It is not a relevant cost. So now the only relevant costs that we have here now are direct labor, direct material, variable overhead. Because this overhead, now why are we considering variable overhead? Because variable overhead, when you hear something is variable, that means what? It changes as per the quantity. You understand? So that one is relevant, but corporate overhead is not relevant, because it's just basically for management and administration. I hope that was able you're able to get that analogy. Now we're told further that there's a temporary storage of material C. Now, don't forget that in this case we have three materials: material A, B, and C. Now, for this material C, now we have temporary storage, and the management of Spicey, they are aware that there will be a temporary storage for the first 3 months. I remember that in the requirements, we're told that we should tell them how much they should produce and sell for the first 3 months. So for the first 3 months, there will be a temporary shortage of material C. And then the material C will only be 6,500. We only have 6,500 kg of material C in each month. That means month one, 6,005, month two, 6,005, month three, 6,005. And then this material C now, they're taking it from southwest. Do you understand? They're taking it from southwest part of the country, and then there's a lot of insecurities, and then they don't have any other material they can use to replace, because you could have advised them now by force, must use material C, use and that's it now, Abby. But now they don't have any substitutes. And aside that, they don't have inventories as well. You understand? So this is something that we can talk about. So what's this telling you? Can you try? Yes, there's a limited resource, there's a scarce resource. So once what bell is that ringing? Yeah, exactly. That is what a limiting factor. So now I used to tell you always, please, when you're doing case study, you don't do I'm a one man mopo because there's so much to know. Case studies, I used to say it a lot, is the umbrella that houses every other course on the ICAN syllabus. Now, limiting factor is a topic in performance management, and performance management is a course under what? Under your skills level. Now, you need that knowledge of performance management here. You understand? So you have to read wide, you have to read far, and that's the reason why you need people. Go solo, don't go solo. Have a team of people. At least you hear from here, from here, from here, from here. Before you know all that information, you gather it together, and it helps a lot in the examination hall. You understand? So I'm going to be using that particular knowledge. And they say that, but performance management is not really under. Okay, sorry, they don't want to know. They will believe that having not done it during the course of your ICANN journey, you should know it. God help us. Amen. All right. So we're told about we get they give us information about the order. You understand? So they told us that for city supermarkets, they're going to order 10,000 boxes of chocolates, the low sugar chocolate, and Derago would order 10,000 of the honeybee. Then for the diabetic chocolates, which is the new product, this is still a projection. You understand? And when you have projection, what does that tell you? Please and please, we have to do what they call what's the word now, professional skepticism. I tell you a lot. I used to tell you almost every time. If you watch my videos, I emphasize that the professional skepticism is the gold mine of ICANN case study. You, as a professional accountant, you cannot take everything they tell you hook, line, and sinker. You cannot say yes, 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 yes. Question it, but question reasonable and professionally. Now you're looking at a projection. You already know that professional skepticism here is what the viability of this projection. Is it actually reliable? That's something you can include in your report. Now, a survey conducted said that what that they'll sell 10,000 to 15,000 per month. What if they don't? We don't know. All right. So now, first off, that's the question, right? What do we now need to do? We already analyzed this. We already know that the first thing we now have to get is our contribution. I mean now, and we already said that contribution actually is what's the difference between contribution and profit. Now, if you look at this now, let's go back up a bit. All right, so here now we're giving operating profits. We could have just used our profits straight up, but we cannot use our profit straight up. Why? Because profit is not a viable or a reliable measure for making decisions or analysis. Why? Because profit includes every cost, including fixed costs, general overhead, corporate overhead, and the likes. That's why we use contribution. Contribution only considers the sales and the relevant cost. That's variable cost, the sales and the relevant cost. So that's why contribution is much more preferred than operating profit. So in some, what just trying to say now is that we should look at the sales and the variable cost. So you're going to have to use contribution instead of that profit. So you're going to adjust that profit to get contribution. Look at what I'm trying to say. Now, sales minus variable cost now, or you can also call this one, you can say this one is relevant cost. Now, what is our variable cost now? Our variable cost is the direct labor, material A, material B, material C, and variable overhead. So we'll just bring it down here. direct labor material A, B, C, and variable overhead. So this is our total variable cost. The corporate overhead, we will not consider it. We have explained that in detail. Let's not waste time. Let's just go further. So now, to get our contribution now, our contribution, like we said, is what? The sales minus variable cost. And I explained that variable cost considers the relevant cost. So that's the reason why we are only considering the variable cost. All right, so sales minus the variable cost that we considered here will give us our contribution per box. Contribution per box. All right, so now the question asked us to what? Determine the quantity they should produce and the quantity they should sell in the first 3 months. So now what's the recommended quantity? Now we're told that there will be temporary storage of material C for the first 3 months. And we've been able to emphasize that we have a limiting factor. And the limiting factor here is what? Material C. Material C, because we have shortage, we have in scarce supply. All right, and the maximum quantity that we can get per month is 6,500 kg per month. 6,500 kg per month. So that's the maximum we can get. So now, how do we now allocate this? So since it's a limiting factor now, so let me explain how limiting factor works. Although it's a performance management topic and we should not go deep, but let me just explain how it works. So look at it now from this example now. I'm going to use my example again. I have 3 books, right? All right. So let's say, for instance, I need 2 packs of paper to print the required number of books I need to sell per month. I need 2 reams, 2 reams of paper. Let's say I need 2 reams of paper to print the required number of books I need per month. I need 2 reams of paper. But let's say something that happened. Maybe there's corona. Let's use that good example. During corona period, my supplier could not come to my house. He could not bring 2 reams of paper. I only had one left at home. And I still needed to print. I mean, now, if you were in my shoe, what will you do? Let's think about it. I have 3 books. You understand? So let's say let's use small figures. One is 100 naira, one is 200 naira, one is 300 naira. And that means which one is giving me more income? The one of 300 naira. But as an accountant, you cannot just make decisions like that. You cannot just say the one of 300 naira, go and print it. No. You assess it. Okay. The one of 300 naira, right, is one giving us highest contribution. Fine, no problem. But which one are people buying more? Because now, if it's that the one of 300 naira is giving me more profits, right? And people only buy one per month. But the one of 200 naira, people buy 10 per month. So instead of printing the one of 300 naira, where I will get 300 naira, where somebody will buy one, I rather what? Print the one of 200 naira, where I'll get 10. So all I'm just saying is that you don't just look at the contribution alone. You have to look at the contribution as per this limiting factor. How can I make the maximum? Which one will give me the maximum profit? 5 years contribution, no problem. That's the first thing we'll look at. But in terms of this limiting factor, in terms of this one ream of paper that I have, which one will give me highest profit? Which one will I gain more? Hmm. Yeah, it is humming, Nabi. You're getting what I'm saying, right? Good. You understand? So now that's the reason why you have to do contribution per limiting factor. So I will now look at it, okay, based on these 3 books I have, book A, book B, book C, I've calculated the contribution. I've seen that, okay, one book is giving me 300 naira, it's giving me the highest contribution. Perfecto. Now, concerning that now, as per the limiting factor, which one will give me the highest too, considering the shortage I have? Do you understand? Which one will give me the highest income? So that's the one I will produce first. So once I finish producing all the one of 200 naira, if there's remaining paper, which one will I go for? The one that will give me the next highest profit, either the one of 100 naira or the one of 300 naira, right? So the one that will give me the next highest profit, I'll print. And if there is no paper remaining for the remaining I will not print anything again because I've gotten my profits. You understand what I'm saying? So that's why you have to what you now rank them. I say, okay, this one is giving me higher, this one is number one, this one is number two, this one is number three. You rank them based on the contribution it's giving you as per that limiting factor. And then you allocate your resources. You say, okay, for the highest contribution, how many paper does it need? Take, let's finish printing down. We'll print everything of that one that we need. Then if there's any remainder, abi, we will now consider other one, the next highest, that's the second position. And if it finishes there, bye bye. If it's still remaining, perfect. The remaining small paper left to use to print the third one. Do you get what I'm saying? So now let's now look at it concerning in this light. In this light now. Now, okay, I trust the Holy Spirit to help us to actually digest this thing, because I said that the reason for creating this video is to help all those that had issues to know, okay, where was the problem, how they solve the problem, so the next diet you will not fall, you will not be a victim of that again. All right, so contribution per limiting factor. Now I've calculated the contribution. So contribution per limiting factor is a contribution divided by the limiting factor. Now, first of all, we have to consider, okay, what is the quantity of material C required by each product? Now, what is the quantity of material C? Now, each product requires how many of material C? Let's go back to that question. Now, material C, look at material C. Material C is 10 naira per kg, but for diabetic chocolate is 5 naira, 1 naira, 3 naira. So now, if is that, so now let me ask you a question. If I say, okay, I want to buy biscuits of 15 naira, and one biscuit is 10 naira, how many biscuits will I buy? 5 naira, 5 biscuits, right? I have 15 naira in my hand. I want to buy, and one biscuit costs 10 naira. How many biscuits can I buy? 5. Because 15 naira, 10 naira times 5 will give me 15 naira, and I have 15 naira in my hand, and one biscuit is 10 naira. So I'll get 5 biscuits, right? So that means what? The quantity is 5. So we need the quantity. So that's the reason why in this particular case, to get the quantity of material required by each product, we do the product's cost 15 naira divided by the price per one, 10 naira, will give us 5 biscuits, something like that. Do you understand? So now the price per kg for material C is 10 naira. So now 5 divided by 10. In this case, now we have 5 naira divided by 10 naira. That means what? 0.5 kg. That means diabetic chocolate is one, the quantity of diabetic chocolate is 0.5 kg. Then for low sugar, 0.1. For honeybee, 0.3. I hope that's clear. If you have any question, just ask me in the comment section. I would be there to attend to your question. You understand? So let's move on. So now, why did we do this now? We did this because we need, this is the denominator, the limiting factor. So contribution per limiting factor is the limiting factor, material C. Okay, so let me put it so that you can understand. Material C in quantity. In quantity. We need it in quantity. But the one we had was in value. So we had to get the quantity. Do you understand? Do you understand? So if you have any question, just ask me in the comment section. I'll be here to attend to your questions. So contribution per limiting factor. Now, contribution per limiting factor, that's contribution over the limiting factor. That's the contribution. No one we calculated the contribution in this particular case. We have 10 naira, 6.25 naira, 7.75 naira. So 10 naira, 6. So you divide it by the quantity that we got here, then you get your contribution per limiting. So as per the limiting factor, now if you look at this now, which one is giving us highest contribution? Diabetic chocolates. Now you will jump, produce diabetic chocolates, right? But now, as per contribution per limiting factor, it's actually low sugar chocolate that's giving us highest contribution. That's why as an accountant, you cannot just jump and make decisions. You have to calm down, take it easy, do analysis. You understand very, very well before you make your final conclusion. Because now, based on the contribution, we'll have just jumped to say diabetic chocolate is number one. But look at it, it's actually number three. It's actually the last as per the limiting factor. Remember that rim of paper analogy I gave, right? Good. All right, so this is the first, this one is 25 second and 23rd. So that means we'll produce low sugar first. Then, if any product is remaining, we'll move to produce honeybee. Then the remainder, or whatever is left, will produce diabetic chocolate. So even though it gives the highest contribution, it still ranks last. So now we're told that what material C, sorry, pardon me, we're told that material C has the limited capacity is 6,500 kg. And now the quantity needed per month. Remember that we're told also that the quantity needed per month is what? 10,000 boxes of low sugar, 10,000 boxes of honeybee, 10 to 15,000 boxes of diabetic chocolate. Remember, right? So now that's the total quantity that they need to supply or the order they have. Now that's the total material, total quantity, total order. Or let's just say total order. Let's just make this total orders per month. So this is total orders that they have per month. Now, for material C now, how many of material C do they need for one? Now, to make 10,000 boxes of diabetic chocolate, they will need 5,000 kg of material C. This was, remember how we got this quantity of materials now? This was 0.5, 0.1, 0.3. So now, I trust the Holy Spirit to help us to give us understanding. Now, to make now how many of materials see do they now we know that okay, you people want to make 10,000 boxes of diabetes, 10,000 to 15,000 boxes of diabetes chocolate, 10,000 of each of low sugar and honeybee. Now, for that limited resource that we have, how many kg do you need per one? Because now we only have 6,500. Now, this one now needs what 5,000, this one needs 1,000, this one needs 3,000. If you add all this together, how many do you have? That's 5,000 plus 1,000, 6,000. 6,000 plus 3,000, 9,000. And we have what? 6,500. So, we are short already. You understand? We don't have enough. We don't have enough capacity. Because if we are saying that we need 6,000 and we have 6,500 and we need 9,000, so we're short by about 2,500. You understand? We are short. We don't have short. We don't have, so we cannot supply everything. But we know that this low sugar will collect 1,000. Even before we even look at that, let's even look at this thing. Now, this one is one. This one, no, nobody that no sugar was number one. This one is 1,000. Know that that's the first one. Will supply everything. Now, if it out of 6,500, if we remove 1,000, how many will be left? 5,500. Honeybee needs how many? 3,000. I know that we have 5,500 left, right? So let's even look at the calculation here so that you understand what I'm saying. So now, ranking now. This is the low sugar is the first position. Remember that we did the ranking here, this ranking. I just copied it and pasted it here. So low sugar is number one, honeybee is number two, diabetic is number three, right? So this one needs 10,000 to 15,000. So they may even need more than 5,000 self. They may even need up to 7,005. Oh, 5,000 alone self. We don't have the capacity to fulfill it. So now, what's what allocate to the first one? Right? So first position that needs 1,000. If you remove 1,000 out of the 6,500, how many will be left? 5,500. All right. So do we still have anything left? Yes, we have something left. So let's go to the second position. Second position needs how much? 3,000. Right? Second position needs 3,000. And out of 5,500, what's left? 2,005. Right? So, but the third one, they need the minimum they need, because they told us that between 10,000 to 15,000 boxes, but the minimum they need is 5,000 kg, and we only have 2,500, right? So let's say the quantity of diabetic chocolate they need required 5,000, and we have only 2,005. So how many will we allocate? We'll allocate only 2,005. So the material allocated will be 2,500. So, but this one, the first position got everything because that's one giving us highest contribution per limiting factor. The second position got everything because we had the capacity. You understand? Because that's the second highest. But the third one could not because there was a limited capacity. So do you get now how many boxes? Remember that the question asks us that what we should tell them how many they should produce and sell. How many boxes of diabetic chocolate should they produce and sell? The question did not say according to the shortage of the material C, how many of material C can we use to produce? No. The question said what's the quantity we should produce and sell. Now the quantity we should produce and sell in the first 3 months now. Now we know that the only material they can allocate per month is 2,500 kg. They can only allocate 2,500 kg. And we need 0.5 kg per one material. You understand? So the number of boxes that we can produce is only 5,000 boxes. So the number of boxes we can produce and sell per month is what? 5,000 boxes. 5,000 boxes. So we can only produce and sell 5,000 boxes. Do you get? So if you have any question, just let me know in the comment section and I'll be there to attend. They were also told to what use Ansoff product master. So this is just the diagram. So in your appendix, just draw the diagram. You don't need to talk story in your appendix. In your appendix, when you're using a model, how this because no ICAN does not they don't really ask models. So it's like, oh my god, they asked model the first time in since the present era started. No problem. Just draw your model in your appendix section, then go to the main reports, and then this is how you do. So let's look at it now together. So have a heading. Marks are given for heading. Please and please and please. Marks are awarded for heading. Please, marks are awarded for heading. Please draw a heading. Draw a heading. Then after doing that, after doing your heading, the next thing, let's have this small letter. The next thing you do, you can just talk about it. Viability of diabetic chocolate um was evaluated using contribution. You understand? By computing the contribution, and computations are in requirement too. The reason why I did this is because some people that like me that used to forget how I have to do in bracket appendix 2, in bracket appendix 2. You can I must link your appendix to your main report. I always say it all the time. Marks are awarded for that. So you can just put it there. Computations are contained in appendix 2. Calculations are in appendix 2, whatever. Just put it there. You must shall link. Then now, tell us what happened. The contribution per box. Remember that we said 10 naira. And now, the fact that it's 10 naira is even telling us that it's actually viable because it's not giving us negative contribution. It's giving us a positive contribution of 10 naira. That means what? It will generate higher. In fact, it even generates higher contribution compared to other products, and then contribute to the overall contribution of the company. Then tell us a little about the information. Now, a little, because marks are not awarded for just taking information and dropping it there. Information that they gave you and not telling us and dropping this to make your report lengthy. But in as much as you don't have to copy and paste information, write your report like anybody that does not even see the question, that sees my report, will understand what actually went on. So you give them a little about the information. Okay, temporary storage happened, which is limited to 6,500. Hence, the three products were ranked. You understand? What did you do? Because of the limitation, you now what? The limitation of the boxes, right? Okay. Because of the limitation of the boxes, you did what? You now ranked. The products were ranked according to their contributions, right? Then low sugar we produced first. You know that's what we did. Low sugar we produced first as it contributed the highest contribution of six two naira 50 kobo. You know, if you don't if you didn't say all competitions are contained in appendix 2, you can just come here and say in brackets appendix appendix 2. But we already said all computations are there, so we don't really need to do appendix. You understand? So then the honey bee with the second one will be what produced, right? Second highest to be produced. And finally, the one that had the diabetic chocolate would also be produced. You understand? So they're not telling them what you did. Then the total material needed for the diabetic chocolate, because that's what they asked us to do for the first 3 months. For the first 3 months is 0.85. So this will be giving what a total of 5,000 boxes of diabetic chocolate for the first 3 months. For the first 3 months, this was what they actually told us to do for the first 3 months. So we'll talk about it. You don't need to bolding your own, no, don't need to be painting your own in the example. I'm just making this bold so they can see what I'm trying to talk about. Now, don't forget that in the unseen, we're told that there was a problem about spices manufacturing facility being messy and undercover agents. I said agents. An undercover reporter went and saw it, and then they also told us about bromates being used as a preservative, and then NAFDAC was warning them, and also you can talk about that. That's also a professional skepticism and an ethical issue in a way, because in the pre-scene we're told that Spicy is a company that in fact they take environmentally friendly operation very very personal, and now a company that you're saying that environmentally friendly operations are taking personal, you are now that same company that is what in a messy environment, like, is contradicting what you are saying. You understand? So a major concern, first of all, no, we talk about is when you see projection, the viability of that information, question it. A major concern is the viability of the information used. You understand? Talk about that. Then what? The fact that they claim to be environmentally friendly and then they are not what they're having messy facility. This one is making us to be thinking twice. So are they really saying the truth? So now they must ensure that the manufacturing facility is kept clean at all times. And then the use of bromate too, they have to stop it because what NAFDAC has told them that that's their last warning. And then the Ansoff product matches, we're told to use Ansoff product matches. We drew that in our appendix already. So talk about it a little. Ansoff product matrix too. This one is in appendix 3. Yep, appendix 3. So the answer product matrix was used to evaluate the sales. You know, this is what they asked us to do. And the two strategic objective was to expand the range of customers through development of market and product through a wide range of and sales of distribution channels. This was the first one. And the second one was to enhance the CRM, enhance customer experience through CRM. So this was the second one that they gave us too. So they told us that we should what? How does their development strategies actually help us to achieve our objective? The strategy that we use concerning our sales. How is because everything I used to tell you that everything is revolves around the company's objective. So how does that help us to achieve our objective? That's what they're trying to tell us. Use answer product passage to tell us that okay, how does our sales strategy help us to achieve our objective? Because we are doing strategy. All what we're trying to achieve is what the objectives we have set, our strategic objectives, our long-term objectives. So the first item here is market penetration. Now, market penetration involves what sale of existing product to existing customers or markets. You understand? So through market penetration, they'll be able to achieve the second objective, which is what enhancing customer experience through a strong CRM. You understand? So this is on the condition that they actually have the right product and right location actually. So what are we trying to talk about here? The market penetration is saying that we should go further, we should penetrate more into the market. That means what all those existing products, the products that we had before, all those products that they listed that they were selling before, want to sell it to the existing customers, want to penetrate more. Let's say for instance now, let's say for instance chocolates, right? Chocolates, so they're producing chocolates. So let's say they're already producing chocolates for Abuja and Lagos residents. So now, yes, the existing products is chocolates are already producing for Abuja and Lagos residents. So let's say that want to now produce more, want to do more, want to enter more. You understand? Let's say we're producing for 10 before, 10 people. We want to start producing for 20. Let's say we're in 10 markets before. We want to enter 20 markets. So that's market penetration will help us to achieve our objective, our second objective. You understand? Through market penetration, we can what enhance customer experience. If you have effective customer relationship, we are relating with them very well. We are doing them very well. Be able to penetrate much. Is it customer that you did bad to? Have you ever bought some products or probably patronized some vendors before you're like, no, never again in my life. In my life, even in my generation, they will never patronize this person ever again. You understand? So how would customers be able to how will you be able to penetrate through customers, how will you be able to penetrate through existing market? That's if you was have a good relationship with them, if you have a strong customer relationship management. You understand? So that strong customer relationship management through market penetration will be able to what achieve that objective. All right, so the second one is product development. Product development is saying that we are selling new products to existing customers, new products to existing customers. So now, these same people in Abuja and Lagos now, these new people now, these same existing customers now want to give them another chocolate. Like now, for instance, this is diabetic chocolate now. You understand? Introduction of diabetic chocolate is a very good strategy. So this diabetic chocolate now that we're introducing now wants to now start selling it to Abuja and Lagos residents. You understand? So now this will help us to achieve the first objective. That's be able to expand our market and product. Be able to expand our wide through a wide range of distribution channels. You understand? Because now we're already a new product, we are putting it into the market, developing it. You get. Now, moving on to the market development. Market development is sale of existing products to new customers. Sale of, don't get it, don't mix it up. Oh. Market penetration, existing products, existing customers. Product development, new products, existing customers. Sales development, existing products, new customers. That means now those previous products we have, we now want to start selling it to Port Harcourt residents, we want to start selling it to Zamfara, Kano residents. They told us that we're particularly in Lagos and Abuja. So we're not yet in new markets yet. So we now want to be selling those existing products towards new customers. So now, through market development, we're able to achieve the first objective. We're able to expand, you understand, through a wide variety of distribution channels. And we can also do this through what? All these our supermarkets, all those contracts, all those products we're selling, you understand? We're able to, if you're supplying those supermarkets, entering new contracts, be able to what? Do that market development and achieve it very, very well. So now, diversification. No, diversification um actually involves, so this is diversification, sorry. Diversification involves no product development is existing products to what? New customers. But diversification is new products to new customers, new products to new customers or market. That's diversification. So although diversification is a great way of spreading risk, because when you diversify, you put your risk in different places, you understand? But entering a new market is a risk on its own. So that's why they have to do a thorough market research. So you have to also talk about it, that there's a need for a thorough market research. But if they diversify, then they can achieve their first objective, which is to expand their product market. You understand? So that's how we can use product matrix, Ansoff growth matrix to actually assess the company. So this is what we're trying to tell you to do. Basically, like, oh my god, so this is what we're trying to say. It's fine. Don't think of the past. Don't hold on to the past. Move on to the future. The most important thing now is that, okay, you know it, so that next time you crush it. So don't wallow and say, if I had known, if I had known, this is what they needed. Don't think about all that. It happens and stand for. Just have to move on. The most important thing is, do you know what to do in case of next time? That's what matters. So then you conclude. Tell us about the diabetic chocolate. Chocolates should be introduced because they act. They say that they want to introduce. Should they introduce? Should they not introduce? Because if you're telling us all these stories, and eventually, your conclusion not have head, not have tail, not have direction, it's not good. So have direction. Yes, it should be introduced because it actually yields a positive contribution. And then, how many boxes should they produce? Because they told us that we should tell them, recommend how many should they produce in the first 3 months. So they should produce 5,000 boxes in the first 3 months. And then the answer of ghost matches was actually useful in actually assessing the development strategy of Spicey, the sales development strategy. Then conclude on all those other information. The internal and external parts of the manufacturing facility should be kept clean. And then the bromate as a preservative should be stopped. They should stop using it because NAFDAC has warned them. Then give a recommendation. Your recommendation should be in bullet point. Give a recommendation. Introduce diabetic chocolate because they asked us, they want to introduce, should we introduce, should we not introduce? And how many boxes should we actually produce? That's what they're asking us to do. So yes, introduce the chocolate and also produce 5,000 boxes per month. Keep the facility clean and stop the use of raw meat. So this is basically all that we're talking about in the requirements 2 of ICAN of the May 2024 syllabus. So this is all that we'll be doing in today's class. This is where we'll stop the video. So we've been able to successfully look at the pristine and unseen. We've been able to successfully look at the requirement 1 and then now the requirement 2. If you have any question, please let me know in the comment section. If you have not subscribed till now, why? Like why? Like why? Why now? Subscribe or yeah, hit that subscribe button. So I'm going to release the final video where I'll show you the complete report. That's the complete report from cover page down to the appendix. Cover page, executive summary, introduction, recommend 1, recommend 2, and appendix section. I'm going to release that video for you to watch. So turn on your notification bell so that you can get updates of my new videos. Alright, so with that being said, this is where we would end today's class. Share this video. If you need my books, just reach out to me. Those books are going to help you to study and assist you as you prepare for the next diet. So see you in our next class. Bye.